All right, welcome. We are here today, I'm excited, with Ethan Morgan of JP Morgan here in Orange County. We're gonna talk about how you can use tax advantage solutions that they have to buy luxury homes. Ethan, thank you so much for taking the time to join us. I really appreciate it.
Well, thank you for having me here. Really appreciate it as well.
Absolutely, absolutely. As you can see, we're sitting actually in one of our luxury listings here in Pelican Crest. Thought it would be appropriate because some of the topic, or specifically the topic, is going to be kind of tailored around how clients can utilize this particular solution that you've shared with me. So before we dive into that though, I think it would be great if you could give a little intro about yourself, talk about the role that the private bank has here in Orange County.
Sure, love it. Thank you. So the private bank at JP Morgan is one of the oldest in the United States, but ironically in one of the greatest wealth centers, we did not have a presence. And so I have been in Orange County in private wealth my entire career, starting in the mid-90s. Was hired about 10 years ago to build out our presence. So when I came on board, we had 3 people in all of Orange County and San Diego. We now have close to 60 in Orange County and 40 in San Diego. And the reason our growth has been so substantial is because we've been incredibly welcomed by the community, and have had a great run in terms of the growth of the business, and serving the top families of the communities, and looking forward to now doubling the size of the team again. That is our commitment here in the coming years. Wow.
Okay. In the coming years, how many years approximately?
That is our 5-year growth plan for Orange County and for San Diego.
Okay. Yeah, I mean, I'm sure that you've been well received because you have such a fantastic team. I happen to know personally 3 or 4 of them, and you've got a fantastic team. And again, I think that the brand carries a lot of weight. However, you have to deliver, right?
Every day.
Yeah. I full disclosure, I worked for JP Morgan for about 5 years, and I still feel like it's kind of my home, even though I'm gone. But led by one of the greatest probably CEOs that, in my opinion, has ever existed in the financial services industry. So I think that you guys prove yourself every day. So there's no wonder that you've gotten to where you are, and I guarantee you're going to surpass where you're shooting for.
Appreciate it. Agree, and have had a meaningful number of interactions with our CEO, Jamie Dimon, and he was one of the reasons why I came to the firm, and was not disappointed one iota each time I was able to have a conversation with him.
Of course, yeah. All right, so let's talk economic outlook and kind of forecast out what you're thinking. I mean, big picture, but also let's keep it kind of hyper local as well.
Yeah. So high level, our base case for 2023 is that we're anticipating a mild recession. Nothing crisis or substantially noteworthy, but that we're going to see the Fed make a few more moves, smaller moves, and then pause and wait to see what the impacts are. We anticipate that will most likely be somewhere in the low 5s and stay there. And the market is always forward looking. And so right now our equity markets are choppy because still trying to size out what this means. We've seen some incredibly compelling yields in the fixed income market in bonds. We've been doing a lot of work there for our clients. But the implication for what our conversation is today is that it is ultimately impacting mortgage rates. And we've already seen mortgage rates come off the highs as a result of this forward-looking dynamic. So right now, our mortgage rates mid-5s, mid-low 5s, depending on the tenor, the number of years of maturity of fixed rate. And we think that most likely is going to see a move further down over time. No guarantees, time will tell. But it feels like that's the right path, and that it has implications in terms of how our clients should be thinking about their financing on their balance sheet, not just for mortgages, but more generally for their balance sheet in general.
Yeah, I mean, this conversation really is that concept, right? We're not talking mortgages here. I mean, we're talking about very sophisticated strategies that are tax advantaged in so many different ways, right?
Exactly.
And we're going to get specifically to the solution that we're really here to describe and educate people on. But I appreciate that overview. I mean, I was just saying to you earlier that, a lot of clients are in that wait and see mentality. Maybe I hate to say the word less sophisticated people, but it was people went from 2% mortgages to 5 or 6 or whatever the number might be when you're watching this, and it's made people pump the brakes, which unfortunately, look, people, like this type of home, this is a want, not a need, right? Like no one needs a 12,000 square foot, $30 million home.
But it's beautiful. So I'm glad for you that you're representing the seller, because it is an amazing home.
Yeah, but at the end of the day, those clients, which we deal with basically the same clientele, they're going to want to find ways to save on taxes, to use their balance sheet, right? So the timing for this is really spectacular. So let's talk more specifically about this tax-aware strategy that we've kind of danced around, but let's dig in. You had mentioned that there is a property here in this community that we're in currently that has taken advantage of this solution that you guys offer. So maybe you can talk a little bit more about that.
Sure. So high level, this was a handful of years ago. They reached out, their family office reached out because they were planning on paying off their mortgage. It was about a $10 million mortgage. It was an older mortgage, so it was able to deduct the interest on $1 million. Now, of course, it's $750,000 you can against ordinary income. We shared, we knew their income statement. We understood how their cash flows worked, and we knew that they actually qualified for this strategy most likely. And so we asked the question, if we could show you how to have substantial mortgage debt but be able to deduct all the interest expense, would that be compelling? Would that be interesting? And of course, their immediate response was, of course.
Of course, yeah.
So from there, we then shared the concept. It did require them to pay off the mortgage, and then we did a refinance. This always is going to require new mortgage debt if not already using this particular strategy. Did so, and ultimately they liked the strategy so much that they doubled down and increased their mortgage quite substantially over the original $10 million when they did that refi and brought the cash out.
Yeah. So I think the takeaway is, people are very focused on, it's almost like an ego strategy where there's, I have a 2.125% mortgage or this or that, but you have to look much bigger picture. You're talking about very sophisticated strategies that are taking into account someone's entire balance sheet.
Definitely. And not only that, but we always encourage them to talk to their counsel. This particular client had a Big Four accounting firm. They went to them. That accounting firm validated that the strategy made sense in their circumstance. And so ultimately, what this can do is move an effective rate. Right now we're in the mid-5s, as discussed earlier, can move your rate down by upwards of 30-40%. So if you have, in California especially, so when you're able to do that effectively, a 5.5 rate could go down into the low 3s potentially, which in today's environment can be quite compelling, especially if you have a substantial amount of outstanding debt on a home.
Yeah. Of course, you're not giving, tax advice as someone coming from, we know compliance is
exactly.
But actually segues very briefly. We didn't talk about discussing this, but as the private bank overall services that someone multi-hundred millionaire billionaires, you have an entire team that obviously helps with tax strategies and legal and all of that.
And that's really within the context of private banking and private wealth management. That is the differentiator, is we don't have conversations specifically around a mortgage with clients typically,
right?
Or an investment. What we have discussions around is their holistic situation, their balance sheet, their risk tolerances, their family dynamics, their needs, and then lace everything together in one strategy overarching that really addresses all needs in the most symbiotic and the most effective way for them in a way that they can understand and appreciate, so that they get to focus on what's most important to them, which is usually their family, their business, their travel, whatnot.
Yeah, it's just as you were speaking, it dawns on me, especially coming from my background. You're talking about generational wealth. This isn't someone they're not planning 1 or 2 years at a time. You're talking about generational.
And typically not a $2 million home purchase. We're talking about a minimum 5 typically, but usually a $10+ million home purchase.
Right. But including I mean, you're talking about probably multiple mortgages and commercial real estate
Correct.
portfolio and, their business and all of that. So yeah, it's a very holistic approach to generational wealth. So let's talk more specifically so we're sitting in an almost $30 million house. I do have a buyer for this property, and the person I'm talking to is very specifically wants to pay cash for the house. Doesn't want, he's real old school, like I don't want to have a mortgage kind of guy. Let's drill down to tell people exactly, how can your solutions with the tax aware situation, like how could this work?
So a very typical scenario, of course, as you're mapping out, because a lot of our clients tend to first think about purchasing cash, especially when rates are elevated as they are today. So completely understand. So number one, you need to buy the house cash in this strategy. So perfectly aligned.
Which, sorry to interrupt you, but which is great because a cash offer is always the best offer, right?
Gets you in the door,
it actually is a win-win.
Puts you at the top of the list.
So cash, make the deal, clean. You're probably going to get a better deal on the house.
And a higher probability of the seller wanting your deal.
Correct, yeah.
And so along those lines, what we do is in tandem, we then enter into an underwriting to be able to go through the process of approval and fixing rate so that the client knows that they're going to get a mortgage if they so choose to follow this path. Ultimately, you have to hold the home debt-free for a window of time for this strategy to work. So this all still runs parallel perfectly. Then ultimately, we typically will have the approval and rate lock done before they even own the home. So then they know that the strategy is locked and loaded and ready to go for them. But then they hold the home debt-free for a window. And ultimately, once they then do the cash out refi, the loan with us, we very intentionally put the funds into particular strategies of cash and liquidity for them to then allow the interest expense of the mortgage to be able to be deducted against other income that typically would not actually be able to be deducted.
Okay. So we're not going to share the specifics of that. You have to reach out to us because that sounds like secret sauce.
It is secret sauce.
Yeah.
And the interesting thing, I mentioned to the client earlier, they ended up doing a number of homes because it worked so well. They were so impressed and appreciative. And most of the clients that we talk to, even those that work with large accounting firms or have family offices, the majority have not seen this strategy or implemented it. And so there are a lot of very sophisticated clients out there that could benefit from this, but simply have not seen it firsthand.
All right. Well, that was really helpful to understand, at a deeper level. And it's timely. It's very timely because, the market here, the real estate market, luxury real estate market here in Orange County, has not cooled off. I mean, we just closed down the street a purchase around $33 million, got a couple more in escrow. This one has a high level of interest. And that's because, demand has, ever since COVID, right? Ever since 2020, people have found Orange County to be
paradise.
Paradise, right? I mean, it always was, but all of a sudden it's,
near and dear to our hearts, so to speak.
Yeah. Well, and that's going to help you, obviously, as you're, building.
Already has been.
There's a lot of wealthy people moving here. Yeah. So the interest is the demand is very high. We're seeing and have been seeing a lot of people moving from Los Angeles and the surrounding areas. We were discussing this mansion tax that's about to hit in April, which, I'm hearing a lot of people are, probably going to consider selling their 10, 20, $30 million homes up there and move to Orange County. So it's going to benefit all of us.
Not just those individuals, others who might have considered going to Los Angeles now potentially rerouting where they purchase instead of LA coming south to Orange County.
Correct. Yeah, definitely. So all good for us. You already talked about the private bank office here and what your objectives are over the next 5 years. Any final thoughts? Any parting words of wisdom?
Well, number one, thank you for inviting me on. Number two is, I think given where rates are at today, this strategy that we shared a little bit of the concept of is more relevant than ever. And when you have somebody buying a $30 million home like this, all cash, for them to be able to effectively, in today's rate environment, on a tax advantage basis, be in the 3s net equivalent, with an understanding that as rates go down, if they go down, which we think that there's a good chance of here in the coming couple of years, that they will be able to very, very inexpensively refi down and still get the tax benefits out of it. Net equivalent, getting them potentially to a place below where their current, say, 2.5% rate non-deductible is.
Right.
That's compelling. And in the context of the holistic strategies that we implement with our clients, can have a lot of positive benefits across their entire plan. And so my hope is if they're not doing it with JP Morgan Private Bank, that they're doing it with somebody. But obviously, we would appreciate the opportunity to at least be at the table and bring our thought leadership and help you place families in wonderful homes like this.
Yep.
And at the same time, build new relationships and partnerships as well.
Absolutely. Absolutely. Thought leadership that leads us into, so this is the pilot of a series that we plan to do.
Yes.
You have more than one, arrow in your quiver, right?
So you got a lot of good ideas.
You got a lot of good ideas. So I look forward to sitting down with you on the next one. This has been fantastic. I hope everyone, really appreciates it as much as I do. Thank you for your time. I really appreciate it.
Thank you.
Okay.
Appreciate it, Michael.